All right, all right, all right. Good afternoon, team. Good afternoon, good afternoon. I hope you're all having an amazing Tuesday so far. I hope you are ready for tomorrow. We have FOMC rate decision. We're going to get a rate decision. We have been waiting for this for a while, and it is our first FOMC into 2025. So I expect a lot of volatility. And we also have tech earnings this week as well that we have to be careful for. And that is one of the main reasons why we have been, as admins, de-risking a lot of our positions and making sure that our team are getting out of their positions so that they don't have to be in any positions. If you remember in the last class, on Thursday, we talked about the S&P 500 being very overbought here away from the 20 EMA line, and that we would need to correct back down to 595 area, and we would assess from there based on the momentum that or the reaction that we would get. So heading into Monday session, we went from 608 all the way down to 594 in the same day, and we got that same correction that we always say when price action is way too overbought and you're extended far away from the 20 EMA line, expect a contraction back down to the 20 EMA. So seeing how strong how strong Thursday's session closed and how we still came down on Monday's session really just tells us how consistent this is to just trust the 20 EMA line when you're very, very far extended from it. Let price action consolidate, let price action come to you, and then trade off of that reaction from there. Because the beauty is, as an options trader, that can come from these little dips is that just that little pullback on the S&P 500 sent one of the best stocks all the way down here to this level of support. So if we take a look at where NVIDIA is sitting at, NVIDIA is now sitting right at this support level of this bullish channel, possibly creating room all the way back up towards the 180s in the future, the 170s and 180s in the future. So the only way that we can catch these amazing opportunities is by waiting on the sidelines and letting the market present us with those opportunities. For today's session, team, what I would like you guys to do heading into the upcoming sessions is that I want you to just start butchering every single chart you come across. I want you to start charting everything on all of the different time frames, and I'm going to show you how you can go through the different time frames so that you can pull up the bigger time frames and also chart those time frames. So what do I mean by chart those time frames? Let's take a look at the monthly time frame here. I want you to draw your support here on the monthly time frames and connect those same data points that we talked about in the mentorship program. I want you to draw the zones, all of the zones that we have, pretty much every chapter that we have studied. I want you to recognize those price action strategies and see how it went, how they went back up, which candles were printed, what candle countered that, what happened from the soda reaction. I want you guys to be able to see what happens and how you can gain experience from going back, looking at data from the varying different time frames and seeing, okay, this can happen, that can happen, this is what happened during this time of history and so forth. So this will really give you a solidified understanding on price action, and it's going to help you with the curve and even increase that curve of experience. So taking a look at this chart here, we have talked about trend lines. So what I want you guys to do is like just start charting random stuff. For example, okay, what would be the best chart setup in this particular one? All right. Let's go ahead and draw that. And now let's go on a different time frame. So we drew that on the monthly time frame. What I want you to do is I want you to go look at it on the weekly time frame. All right. So even though I drew that chart on the weekly chart, on the monthly chart, this is how it looks like on the weekly chart. Okay, interesting. Now I'm going to go ahead and look at it on the daily chart and so forth. So looking at the weekly chart, you can see that on this day right here, this would have been an amazing opportunity to enter RCL on that massive bullish piercing candle or even engulfing candle that pretty much regained this bullish channel. So looking at the different time frames here and charting every single stock helps you gain that experience. So now we go to the daily chart, and what I will do next is draw a trend line there. I will connect the lines and I will see, okay, so this is what happened when this particular trend line, this bullish uptrend line, was lost. We had this massive bar that pretty much um, said, okay, we're going to correct from here. This is the end of this uptrend. So sometimes, like I said, in an uptrending market, you may not always get a massive sell off. Sometimes you'll just see this, or not sometimes, in most cases, actually, you'll just see price action consolidating on the bigger picture and creating this sort of structure to just establish and visit demand zones, pick up the demand, or if we're in a downtrending market, pick up the supply at the resistance and then go for further selling. So this is RCL, and go to the weekly chart, take a look at how what it looks like on the weekly chart, all of that good stuff. Go to a different chart and just do the same thing. Look at NVIDIA, go to the historical data for NVIDIA, look at the monthly chart, zoom in around here, pay attention to every detail. Look at the RSI at this time. Go to the weekly chart, like I said. Visit all the times that the stock broke out. Okay, the stock broke out right there. What were some signs that I can recognize heading into the futures? All right, we got a breakout candle there. I see that they tried to go down there, but bulls stepped in and closed above the breakout. Looks like they had another session where bulls tried to advance but gave it up. But they came in the next week and printed a large breakout candle that initiated that advanced cycle. So paying attention to what bulls do there. What was the RSI doing at the time? What was the RSI doing? Was the RSI telling us that we will go in a melt up operation like we have studied? So take all of these things into account. Look at the volume. All of these things here will really prepare you for the real markets when you start to recognize things on your own. Because and it's going to happen at a natural state where you'll continue to just chart every single day for weeks and weeks and months and months and months, and before you know it, you're starting to chart actual stocks that are on the move and you're taking advantage of them. So I do want to make another point here. I don't want you guys to be trading. Try to focus on really learning and identifying these setups on the chart. If you do come across a setup that you see that resonates with you from the mentorship program, it's completely okay if you missed out on the move, or if you hesitated to take a trade, or even uh, paper trade it. That's perfectly fine, because again, you're building that experience, which is very crucial. You're building the experience that is going to prepare you to be able to trade on your own when you are ready. And the only way that's going to really happen is like that hesitation that newer traders have. The only way that this will be taken care of is through repetition and experience, by continuously identifying these setups where it doesn't become strange to you to the point where you won't know what's going on. You're going to trust the setup. You're going to have a system where you have a firm stop loss where you're going to get out. And you're really going to have the advantage. So please focus on the learning. Make sure you do not tunnel vision yourself on current trades that may stunt your growth at the moment. Try and focus on learning and then being able to expand on that learning as you gain more experience, and it's really going to help you uh, be in a much better environment if you were not learning. So please keep that in mind. Like, there's a lot of times, like, I bet you're seeing traders that are making the same mistakes on the Discord, on our Discord, or maybe on our Facebook community, who have been trading for 2 to 3 years. And unfortunately, some people just don't they don't take the learning approach. And um, we see that, we tend to see that. So the faster or the sooner you practice, the better you're going to be, the better off you're going to be. So like this stock here, ANET, just simply draw your charts there. We have a trend line there, and then you can even redraw as a channel to see if we're in a bullish channel. So far, this definitely does look like we're still in that bullish channel, but that's what I want you to do, okay, team? Just try and really chart everything. Go to the 15-minute time frame, draw your resistance levels, look at where the structure changes, look at where the downtrends come to an end. Once we have a breakout, how do the breakout candles behave? What happens on that 5-minute time frame? What does the chart look on the 5-minute time frame? What does the chart look on the 15-minute time frame? How would that look on the 4-hour time frame? Take a look at all of these things here, and just continue to try and practice. So what are some things that we can draw on our chart? Before we move on, let's make sure that our team do that. This will be your assignment for today's session, hopefully going forward, because I believe we have covered a great amount of materials to the point where you can actually do this on your own. You can identify a lot of these setups and start charting. Pretty much, that's what I mean when I say doing it on your own. I mean just charting on your own and identifying them, and pretty much building the experience from there. So let's start off with the first thing that we want you to do. What I want you to do is just draw these zones here, okay? So we have studied the price balance, the pricing balance. We know that price action moves in two phases. We got the balance phase, which is when price action is in a consolidation or digestion, which is what we call. And anytime you got a digestion, you should know that this price is digesting a prior large move. So whether it's an uptrend or a downtrend, it really matters in the context of the trend. In the context of the move, basically, where price action is going to go to. So directional is when price action is in an imbalance move, where we're trending, whether it's down or up, we're trending. So these two phases make up the cycle of the market, going from flat market conditions to major directional moves. Now, as options buyers, for those of us that buy options, where we profit the most is during the directional movements. This is because premiums can increase at an insanely rate. I mean, fast rate, and it just makes sense that premiums would be benefiting us more during directional markets. So obviously, we will be making more money during directional times. So that's why it's very crucial that you do wait it out during times that we are in these consolidation phases, because what happens is premiums get crushed during those times. And what you want to do as a trader is wait for the premiums to get crushed, because this could be 1 week, 2 week, 3 week, 4 weeks here. And now you got the options of, let's say, a 3 months out expiration down about 50 to 60% that you can pick up at a solidified discount just at the right time. And just as you see the right candle breakout, leaving the consolidation zone, signifying that we're going to go on a directional phase, you enter the trade and you go with the momentum without having to be part of that battle that took weeks and weeks before we finally got a breakout. So it's during this time that a lot of traders get pretty much get shaken out or get frustrated to get out. And that's what the market does. But yeah, so what we want you to do is let's take a look at a few more zones here so you can get a good idea. So what we want you to do is draw these zones here. You see how we have a directional move and then a consolidation and then a directional. I want you to identify those consolidations. For example, this chart that we have here on ANET, the consolidation we can see was right there, and that provided a beautiful move, beautiful rally-based rally setup. So I want you to continuously do that, and also take into consideration that you could have a consolidation on the hourly time frame that could be part of a much larger move on the weekly time frame. So what I'm saying is, like, a consolidation can happen within a consolidation, within a directional move. For example, this one right here, we can see this is a big consolidation. So if we remove this here, even if we were to remove that, this whole rally, this whole movement there is part of that breakout that we got down there from this rally-based rally setup. So just continue to draw them, and then go to the different time frames. Look at look at the data points, see if the data points match when you draw them on the weekly or the monthly time frame, and then fix them if you have to. Just once you go on the 4-hour time frame, fix your data points to get more accurate price levels, and just continue to do that. That's really what I want you to do. And within a couple of weeks, we're going to come back, and I'm going to be surprised. Like, I myself will be surprised at just how incredibly accurate some of you are going to be in identifying these beautiful opportunities in the market. So please remember, just keep on going through all of your charts and draw them everywhere. Etsy looks really good. We'll keep an eye out on this stock here. Wow, this bullish falling wedge has been in motion for about 3 years now, and I think it may be time where Etsy will start breaking out here and having an advanced cycle towards 65 and maybe even 80 area. BBWI. So this one, you see this one, team? This one is basically consolidating here. It's doing a rally base, and it's just going sideways. So identifying these opportunities here, what this means is that heading into tomorrow, you as a trader can take advantage of this move by, let's say, trading BBWI towards 39, because now that we held support, we'll be heading towards resistance to also establish data points at that level. So, like I said, just continue to chart everything you can, and you can just go one chapter at a time if you're new. And over time, as you go through the chapters and draw different price action strategies, different data points, you're gonna get really good at it. And once you go through the recordings, the class recordings, and you catch up to where we are, oh my God, you're going to be in a really good position. So yeah, team, just continue to draw these zones. Okay, draw these zones everywhere. Look at the trend cycle entry and exit decision making formula, and put that into use on your chart. So looking at, let's say, the S&P 500, let's go to SPX, and let's go back to the 2008. So heading back to the 2008, we can see that the stock market came to a halt exactly where the 2001 2002 crash came to an end. So you see that, team? Looking at these data points from the past helps us and prepares us for the future, and enables us to be able to trade those same data points, which we will take a look at very shortly. But you can see, team, if you had drawn this on the weekly chart back in 2012, you would have clearly seen that we're going to go on an expansion move. Why will we go on an expansion move right there, team? If you had been trading at the time in 2012, why would you have expected that to continue to move higher? Well, what is the psychology there, team? Someone share, based on what we have learned so far, what would be the right thing to do, or how would you describe this particular reaction at this level of resistance there? Broke resistance, higher highs. That's right, Charles. Let's see what else our team has. Demand, okay. You mean demand candle there, Tiffany? Breaks out of consolidation and starts the uptrend, directional move. That's right, team. That's what will happen. But what I want you to do is, I want you to pay attention to what happens during that candle. The fat candle right there. That's right, Kevin. So first, I want you to pay attention to the reaction. Okay, this is what happened a couple of weeks prior to the breakout. This is where the Bears should have stepped in, right? Is that not where the Bears should have stepped in, considering the level of resistance we're at, team? Is that not where Bears should have stepped in and basically pushed it lower? It should have been, right? It should have been where Bears stepped in and would have pushed it lower. But guess what? Instead, if you zoom in, and this is on the weekly chart, which means each candle takes 1 week to formulate. So we have 1 week here, another week there, 3, 4. We have 5 weeks of liquidity right there. 5 weeks of liquidity. There we go. That's the term I was looking for, team. The lack of bears. The lack of bears there is screaming to buy. Okay. So what this means is the lack of bears right there, the lack of sellers tells us that we are ready to break this level of resistance that has been tested before and now has been pretty much confirmed to be pretty much to now be surpassed. Okay, does that make sense? Because what happens is that when we're in an uptrending market, we test the level, and once we have absorbed all of the liquidity, the resistance level, we move on. And then in the future, we may come back down and turn that level into support and advance back up. So pretty much using it as a jump pad to go right back up. In this case, team, like I said, you always look at the candle reactions. It's going to tell you so much. Absorb price action closely and see if there are lack of sellers like we see here. And what else are we taking into consideration at this level of resistance? Why would you have been confident as a trader, as an investor, that the S&P 500 was going to have a multi-decade breakout right there? Or a 1 decade breakout right there? We had a decade consolidation there, okay, team? We had a decade consolidation. Now, keep in mind, this is on the much bigger time frame, okay? We're looking at the we're looking at the monthly chart and the weekly chart. So these are candles that each represent 1 month. This is on the monthly time for, so each candle represents 1 month. There's going to be 12 candles in each year. Each of these lines here is in between years, basically. So, team, what you look for is like I said, you use your price action strategies we have discussed in the support and resistance. We discussed that when we get the second test, this is not where we expect breakout. We have talked about this before, and we even saw that on the S&P 500. We didn't miss out on anything, and we felt quite confident to just be patient and wait for the market to come to us. So right here, we said, hey, this is the second test, and we're not going to get a breakout there. So the same understanding goes for this particular chart here on that second test there. Now, once we come back to the level of support and we confirm it for the third time and we come up here for the third time, you can bet they're going to break out. You can bet they're going to break out. We have a massive rally that started all the way from the 1960s. We have a base that that pretty much matured for about a decade, and then we went for another massive bull market for the upcoming decade there, as we saw heading into 2020. But yeah, team, that's what I want you to do. Okay, I want you to look at the different time frames and look at each of the given time frames. Look at the monthly time frame, look at the weekly time frame, go to the daily chart. If you want to see data on the daily chart, you can do max instead of doing the 1Y 1D, which is 1 year out, 1 day. So if I do this, it shows the S&P 500 from pretty much January 28 of last year to this year, 360 days out. But if I go to maximum 1 day, this means that it'll show as far as the S&P 500 can go back. So in this case, we can go back as far as studying what year was that? 1928. So candles hadn't quite formulated from then, but yeah, it still gives you a really good data to gauge and just understand what price was doing at the given time back then. But you can go back all the way in history and really study all of the candles. That's a bullish engulfing at a very, very, very oversold level, with RSI trading at 16%, 15%. We have talked about this. If the RSI goes to 15%, that's a buy signal. So you can see this right here in 1970s. This understanding would have been great. Bullish engulfing there, provided amazing opportunities. Then you take the trend into account, and even that would have provided another opportunity right at that breakout. So just try and draw these charts the same way I'm doing. Okay, team, that's basically what I'm doing here. I'm trying to give you some sort of concept on what I want you to do. I literally just want you to draw like that, and just draw your trend lines, connect all the data points, draw them in different ways, and um, mess with it. Try and learn this stuff. Okay, team, give me some thumbs ups if you are excited to practice this on your own in the um after this class, pretty much. Obviously not right away, but heading into, let's say, tomorrow when you have time. We got one from Mariupon. And I want to say, team, I'm very, very, like, honest to God, I'm very fascinated and proud of what Mariupon is doing. If we go to the charts only, Mariupon's been sharing these charts, and it's absolutely amazing, you guys. He's literally putting in what we have been learning in class into, I mean, it's just really amazing. And I really expect you guys, I expect more of you to start doing this. It's going to be great. Trust me, it's going to be very fun. And um, even if you have no idea how to do it, if you just follow the way that the way that I'm encouraging it. For example, start with chapter one. On chapter one, we talk about how to draw supply and demand zones. I want you to draw supply and demand zones on pretty much on everything you can come across. Draw these zones on everything you can possibly come across. Okay, this was a consolidation period. This was a consolidation period. So just try and draw boxes, try and draw boxes, try and recognize all the times that the market goes in these consolidations, and then draw them on the bigger ones too. Okay, team. Back out of your chart, look at where that led price action. So this big rally, base rally, you can see it sent price action all the way from 102 towards 120. That's a nice 20% on the SPX. So just keep on doing this, okay, team? Keep on doing this. Keep on drawing and zoom in on the charts. Look at what kind of candles formulate. Really study all of that, okay, team? Study all of that, and it's going to make your trading very, very powerful. I promise you that. We're going to come back to you in a couple of weeks, and I'm going to have a session where we're going to practice this with the team, having you guys share screenshots, and maybe some of you even sharing your charts, and seeing if the team is um, drawing the right data points. Zach, we have classes every Tuesday and Thursday. Yeah. Is there a video on setting up Thinkorswim? Yes, sir, there is. You can find the video on you can find the class on how to set up Thinkorswim in our library. So if you go to our library here, you'll find the class. You'll find the class here. This is the class recording. It's about 2 hours long, but it does get the job done. Helps our team build those pretty much get everything that I have on here, import everything that I have. So we can see on CRM, team, CRM, really nice rally, base rally there. And now we're on a melt up operation. So it just looks like CRM is going to rocket from here. That's what I want you to do. I just want you to keep on drawing these charts, draw those downtrends. You see where the breakouts happen. Focus on or pay attention to the details of the breakout. Look at what happens when we get a breakout, when we get a breakdown candle that could have, let's say, shook some traders out. How did bulls counter that? In this case, you can see we have a bullish engulfing candle right there. Pay attention to the RSI, the melt up operation, the TTM squeeze, the volume. Take all of these things into account. Look at the velocity of the 200 SMA line. Again, the candles. Really just practice that, okay, team? I'm going to do more so that I can give you guys an idea. You can see the way that I've drawn my charts, but I'll summarize it. I'll say one more time before we move on to the rest of the class, so you can start chapter by chapter. Okay, even if you're new, start chapter by chapter. So in the introduction to supply and demand zones, we basically draw zones like these ones, the rectangle ones. So anytime you have a zone, just draw it and just keep on doing that over and over and over. Remove the zone, recognize a bigger zone in motion, a bigger zone taking place, and look at where that particular zone sent price action. So uh, just keep on drawing them. Okay, keep on drawing them on different time frames. Go between the time frames, because you're going to learn the platform, you're going to apply the price action tools, and it's just going to get you more and more active from there. Sorry if I'm being repetitive here, team. So again, you're going to do the introduction to supply and demand zones, and then the next chapter is introduction to support and resistance lines. So then you're going to draw support and resistance everywhere you can. So you're going to draw them everywhere you can find support and resistance levels to see when a support breaks down, how it goes lower, what were the triggers, what were the candles that basically signified. You're going to draw all of these things. Okay, draw your resistance levels. So just anything you can get, like right there you see, draw, okay, this right here was support, this right here was resistance, or draw this particular line here, connect it, and see what went wrong, see if you should draw your support level right here, or if you should draw it right there. So continue to practice these, and then you're going to find the answer on your own. Like, you're really, of course, we have the answers. We've talked about everything here on the mentorship program. We've talked about how many data points we need, every little detail about support and resistance that you can imagine. We have studied everything about it. We have over 10 3-hour sessions on it. So we've covered how support turns into resistance, resistance turns into support, all of that good stuff that you can learn directly from the website. So again, draw your support and resistance levels. In this case, let's also draw that resistance level as well. Look at how this faked out. How did this break down? What pattern did we form on that breakdown? We have a head and shoulders. This was the breakdown candle. So pay attention to all of these little details, okay, team? The how did this breakout not pretty much not do what it was supposed to do? Let's say breakout. Why did this fail? What happened? What kind of candle did we form that pretty much really solidified the bearish strength there? Pay attention to all of the little details and just keep on doing it. Okay, team, keep on drawing these support and resistance levels. Go to like Microsoft and just find all of the support that you can draw, all of the support and resistance levels. So in this case, we have one here. We can do this, pretty much connect those data points, and then create a trend line from there, create a bullish channel there, connecting all the data points. So once you connect that, you can see, you can take it all the way up and even see where it breaks down from. Okay, this is where we broke down from. And since we were in a bigger uptrending market, this is where we found support at. So draw the supports, see how the supports reacted when you had think I might need to get a new mouse. You see, every year, team, I got to get a new mouse, because what happens is I think there are certain clicks on mouses where, like, if you hit a certain number, you just got to get a new one. But but yeah, team, you guys get what I mean, right? Like, you see this, that support level there, that resistance level. Okay, we did see that base rally take place, right? And then what happened when we came down to that support level? How did we react? All right, so now I'm going to extend my support level and be prepared for something like that in the future, where if we sell off, I will be prepared to buy back at this level of support, because this is where we got the reversal. So these kind of things that you're learning, that you're seeing, gives you that experience right there. For example, when you see how Microsoft rebounded right there for the third time, and you also saw how earlier the S&P 500 back in 2008 also saw the same rebound in that third retest fashion at a level of support. All of these things really give you that give you that experience to grow and even recognizing in other charts. But yeah, team, really just absolutely butcher all of your chart. Okay, butcher everything. Go back in history, draw the levels there again. Um, really draw everything you can. When we come down, when we get a big market crash, you see this right here was a clear market crash because we went from 190 all the way down to 130 in just a matter of we went from zero so from February 27th to March 23rd. That's a big crash right there. Of using the mouse getting out of positions. So, team, look at when we break down, right? When we have these crashes, where do you expect buyers to show up? Okay, buyers will show up at a major level of support where we pretty much broke out from before that. So we can see right there, this was a clear level of support where the buyers came in there. So that was a good level of demand. And even though we didn't get the right candles there, had we waited patiently right there, we would have known this is it, this is the buy opportunity, and that we're going to advance and see new highs from there. The beauty of a move like that, team, is that when you catch something like this on Microsoft, you catch a bottoming opportunity at a level of support. The opportunity is so great and it's so anxious. And let me explain what kind of feeling this gives me. Okay, imagine you are a parent. Imagine you're a parent and you're trying to get 3 kids or 4 kids in the car to go for a trip, and you're trying to not forget any little anything, any detail. At first you're all fuzzy, you don't know what's going on, but something is very clear. Okay, you planned it very well. You gotta like you have put everything in order. You know that this is your level of support. You got your tools, is what I'm saying. You got your tools, you got your plan, you have your checklists, and now you're checking them off one by one, one by one, one by one. And then right when you're in the car and you guys are actually moving, that's when you get the calmness. So when we come right here, when we come up to right here on Microsoft and we print those kind of candles, that gives me the same feeling, because this tells me then that now that we have gotten a rebound off of that level of support, we have regained the 200 SMA line, which is in an uptrending market. This means that right here, the trend is reset and we are ready for another bull market. Does that make sense so far, team? So when I see these kind of this behavior here, I get very excited because that's exactly what's going on. And the thing is, team, that doesn't just happen with this particular chart. This happens in all charts. And like if we go to, let's say, another one, we'll see the same sort of like I said, it may not always be a crash. Sometimes instead of a crash, the stock is so strong, team, it'll literally go sideways on you. It'll go sideways for about 6 to 9 months doing nothing. And once it finally consolidates, has that range, it has collected. So what is the point of this whole consolidation? What's exactly going on? It's trying to digest this big move here. So instead of selling off like it did before, it consolidates up here, exchanging hands with newer buyers, profit takers exchanging hands with newer buyers, which further solidifies the stability of Microsoft. And then you see the stock will be ready to go on another move after that big digestion. So a stock like Microsoft, like Nvidia, like Apple, whenever you get these beautiful digestion moves, you just got to be really excited for the future, because it's going to come. It's going to eventually break out and you're going to be part of it because you are watching it and you know how to read price action. So really, when I look at Nvidia, this is about the same feeling I'm getting here. I'm just so excited because it gives me the same feeling, and I'm just really excited to continue to react and then trade off of that in the upcoming months here. um but yeah, team, I expect you guys to start drawing charts on everything. Okay, please, I'm expecting that from you guys because you're going to learn so much. Let me tell you how I learned the way that I learned. You see, I used to work as an Uber driver. So I never had like a job where I had to go on the spot and not have access to, let's say, my computer. All the jobs that I got after my Uber also accommodated my trading experience. And let me explain how. So when I was doing Uber at the time, back in 2017, 18, um, during that time, I pretty much like I did my shifts at nighttime, and I would be able to look at the markets during daytime, and you would chart and jive. And then what I would do is, once I got into a multi car chain crash, and I was like, screw this, I'm not going back to Uber. I started getting a cubicle job, like a call center job, where I would go to the office and I would have access to my charts every single day. And I was doing the same thing. Team, I'm telling you, what I'm telling you right now is the same way that I learned. Like I used to go back and look at I was obsessed with all the market crashes, and I used to go back and look at every single market crash, look at the candle reactions, look at every single little detail about them. And you can do the same. Like whenever you have time, just look at the reactions here, zoom in on the uptrends, because it's very crucial that you will know how it feels to be down at these levels after such a crash. A lot of traders are going to be very confused when we are down here, but you having that experience because you've seen how it has traded in the past and so forth, you're going to be more confident to take that trade. For example, you can see that's an uptrending line right there on the S&P 500 from 1975. So you can see this would have been a really good trade. Once when will you have, team, let me say this is an advanced question, okay? This is an advanced question. I know you would have got this trade right here. I know 100% you would have been able to trade that breakout candle right there and take advantage of that beautiful move and make profit. But this right here would have been very, very difficult. Okay. So, what I want to say to you is, when should you possibly take the trade on this move right here? So, let's say we have the SPX right there, which means if you are looking at the S&P 500 index, by you recognizing this breakout of this uptrend there, you are also identifying which 11 sectors of the economy of the S&P 500 are moving, and you will recognize that strength immediately within that given sector. So if it's the technology, you'll recognize it in technology. If it's healthcare, if it's healthcare, you'll recognize it in healthcare. If it's consumer staples, so forth. So my question to you is, how do you trade that test right there? Let me mark it for the team as well. Let's get the annotation, and I want the team to basically point at it and show us how would you possibly trade that third test. You see, I love to be realistic with our team because this is the best way for you to trade. I don't want to show you easy examples to make my job easier. I want to show you the difficult ones so that you are prepared, and that when you do come across an easier setup, that's even better. That's even more of a high quality setup. So what I want to know, team, is how will you have traded that setup right there? Jimmy said, I see Jimmy just circled that area there, team. What else do you have? For a swing, I'd wait for the fourth touch of resistance with breakout as it's rising above the 20 EMA line. Okay, that's Kevin. That's well said. That's well said. There we go. We're getting, see, rain bonds coming in. When rain bond comes in, the trivia is over, you guys. So since rainbow marked it, that's it. That's exactly, yeah, that's right there, team. So this is the moment you start to trade it. She crashed the party. Yeah, you guys. The party's over. That's hilarious. But yeah, team, this is it. Okay. This is the candle. Thank you. Who drew that? Whoever drew that, thank you. So this is Rain Bond. This is the candle you're gonna be trading, okay, team? That candle right there, that big green candle, okay? So can anyone tell us now, why would we trade that candle right there? Why not those little candles that were trading above the 20 EMA line? Why not those candles there? It took out resistance. That's right. That's right. That's enough said. That's exactly how you should have taken that trade. 100%. That's how you should have taken that trade. Also, team, look at this beauty. You guys remember, when you chart, I want you to just not look at charts. Like we said, you want to take a look at these beauties as well. You see that? Does anybody remember these right there? Anybody remember these? This is a high probability. It may look like a low probability down there. It may look like a low probability down there, but it picks up to a high probability setup there. It's a reset and then a melt up operation. That's right, team. So you see the power of patience, right? Instead of you participating when you have no clear sign there, when you have no clear breakout, nothing there, instead of being part of that. And the reason why I don't want you to trade this is because, like I said, team, we want to react. Okay, we want to enter after smart money has entered, and that's the candle that showed that smart money has entered. Now, what were some key things that we were already aware of? We were aware that the TTM squeeze had reset, which means the selling was it for the selling. That was pretty much about it. Unless bulls did something like this, team. I'm gonna draw it, okay? Bears. Unless bears did something like that where they printed a massive red candle in a single day, taking out 10 of those sessions. Unless they did that, bulls had the fuel reset. Bulls had the fuel reset, and as long as they were going to hold up there, they just had to wait for one good day, where they get the breakout, and that's it. That initiates everything. So, how about that candle that I labeled? That's yeah. So I talked about that one, Haider, and I said earlier that that particular one right there would have been very easy. That retest would have been very easy to trade, but this one right here would have been very confusing, and that's why I wanted to test the team there to see if the team would know what we would do there. So, what I want you to do is, first, you don't bother this whole consolidation there. Okay, those whole small candles, you do not make a trade off of those. All right, this is not clear cut candles there. You should now, I'll tell you this is how the narrative goes. Okay, so you're watching this, you see this candle, you should be excited at that candle. Matter of fact, some traders can even possibly enter off of that candle expecting that expansion. Okay, so entering on that candle, you can even possibly expect an expansion, but of course you would want to give yourself time. So what I'm saying is, like, you can enter off of that candle, but really, 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 if you really want to get like get a high quality setup, be even more patient. Be even more patient, because price action will itself show you. Especially like I said, team, I can't speak exactly for what was going on sentiment wise that day, but let me say this, okay? When you experience these markets, they're going to be very, very interestingly clear. It's like some people will say, oh, it's very hard to predict the market. Yeah, you're right, it's very hard to predict the market if you're not watching it every single day or every 5 minutes like most of us do. Obviously not every 5 minutes, but we at least see what the market is doing every day on a day-to-day basis. So we know how it feels. We know, okay, we have been seeing bears trying to attack bulls for how many days here, and they continue to fail even after all of those small candles. Now here's the thing, team, the reason why you don't want to enter after these small red candles there is because this is what's going to happen. When you enter off of those small red candles, you're going to get, for example, pretend these small red candles is that one right there. Imagine trying to enter bullish trade off of those candles, thinking, yeah, bulls held, that's it, we're going to go towards resistance level. That would be very immature of a decision to make. So it's basically taking that into account. When you get those small red candles and we're in a downtrending market or the market is weak, in most cases that will lead to a big sell-off, because that shows that shows weakness. Basically, all those little candles show weakness. Now, when does that narrative actually change and work against the bears? It's when you get the breakdown and you see that bulls just continue to, every single day bears are attacking it, every, like, this is each one day, and they fail to, and even then, now this is where things should have been like on the red side and really breaking down. This is where everything changes. Okay, this is the moment that the tide changes for the bulls. And hear me out. Okay, so after seeing all those red candles, what you're supposed to see is those massive red bars. Sorry, when you see all those green little candles showing weakness, you're supposed to see massive red bar rejections like that, that will just send price action down really, really hard. We're going to take a look at some examples, what I mean. But instead, what you saw was, instead of this being just one day breakdown, breaking the lows and just triggering that massive, massive plunge operation, what you saw is, yeah, bears did come in with two candles, but the candles were so small. It's like you couldn't even tell if it were one of those days. So the fact that bulls come back in right there changes everything. That changes everything. And once you see each by day that the strength, then you see that the TTM squeeze has been reset, and you're just going to see more and more momentum favoring the bulls for that massive, massive move right there. So I just wanted to give you a little bit of the psychology behind how you can read this sort of price action. Um, and there are times where, like, you'll see these massive, massive green bars instantly, and you will know this is a great opportunity right there to buy. Um, I see Abdulaziz shared something here, so I see you are referring to. Let me see. You see this pen in the corner. This is where you draw in the screen too. Oh, okay. Sorry. That's for the team. Sorry. You're showing the team how to do it. All right. So Yvonne said, can you explain why the TTM squeeze is red candles, but the RSI is melting up? Oh, right here, right here. This is because the stock is very, very strong. So this happens when a particular price action is very, very strong. So what this means during this time is that price action is basically cooling off. However, instead of cooling off, it's just going sideways because it is so strong. So we can see that it actually didn't really lead to anywhere, just consolidated. Let's see how long that consolidation actually goes on. So because this was a 3-year bull market, looks like, let's see what happens there. I want to see. Yeah, looks like because we had a 3-year bull market, we had a much bigger correction follow through there. So that correction ended up creating a 3-year consolidation. And looks like right here is when we broke out of that consolidation. Now, team, let's go to that breakout. I want to show you how price action behaves near that breakout and the kind of candles we get. So that's the breakout right there that we got. And team, so remember earlier I told you about those little candles and the reaction that bears should have to it? Do you remember just shortly earlier we talked about the kind of candles that bears need to pretty much have? So you see, I said if we get those small candles, we're going to need to get those big red bars. You see that, right, team? That's exactly what I'm talking about. If you see those small green bars, you better get those massive red bars. Otherwise, it's bears are in trouble. And that's what I was trying to explain. So if the candles are that small and yeah, you should see a very big bearish reaction. And if you don't see that, that just signifies lack of sellers, lack of supply, and that itself is beneficiary for the bulls. But yeah, if we zoom in on how, like, you can pay attention to where the breakouts candle team, where the breakout candles happen, team. Like you see this one right there, that was the breakout candle, and then this was the breakdown came back up right here. This is where we broke out again. Like a lot of times, We have the RSI. We use the 70% melt up operation. A lot of times, what I'm saying is the market is going to be very clear to you. The market will speak volume to you and tell you what it's trying to do. For example, all of those small green candles there, you can see anytime we got the sell off, the counter move was as strong. We can see right there, we can see right there, we can see right there. So these little details there tell you how price is going to behave in the upcoming weeks. Matter of fact, have you guys ever felt sometimes like you look at options and you're like, oh my God, I got the feel so quick on this particular contract. And then the next thing you know, the stock is up really, really big in your going in the direction. This is because the demand is so strong that you were instantly filled for that order. And that's why the reason why the stock moved that way is because the demand was strong from earlier on. So what I'm saying is like you'll see that reflection on some moves ahead of time before these large moves take place. Like you'll see that resilience down here that leads to that sort of expansion. That's what I'm trying to share here. So again, team, you're going to draw your downtrends. You're going to see where this downtrend came to an end. Where did bulls actually change the table, turn the table? And we can see once that downtrend came to an end, bulls really had it from there. Bulls had it from there, and they created their own uptrend line that pretty much that went on for, I mean, as long as possible. Yeah. So right here, this is where we start to consolidate, create another big digestion that lasts pretty much 6 months, 4 months, 4 or 5 months there. Actually, it lasts much longer. Oh my gosh. So, team, do you see that, right? Do you see how every time we get a move, we begin to consolidate on a much, much bigger scale? So having this understanding is very, very powerful. Honestly, very, very powerful. So if you caught it, if you caught those rally-based rallies right there, those itself, I mean, those were all strategies. Those were all pretty much breakouts. You can see that was a small zone that led to a breakout. And if I delete this, um, so what I'm saying is, remember earlier, team, we said that zones within zones, and so forth can take place. That right there on the hourly time frame, the 15-minute time frame or the 4-hour time frame, was an amazing opportunity. I'm talking about this particular move right here. I'll go ahead and draw what I'm referring to. So I know that the chart itself looks very messy, but I promise you, you're going to be trading it day by day. And having this understanding, although it looks so messy, you're gonna do so well. And I'll compare it with today's examples of just how messy markets have been, and yet we are doing good. You know, we're buying the dips, we're selling the rips, and so forth. So what I'm referring to here is that we have this rally and we got this consolidation there, and then this leads to a rally, and now the rally basically comes back down, prints that bullish engulfing candle, and leads to another rally. So although it may look small, these take weeks and weeks to play out, and they're providing these amazing opportunities like the ones that we have studied from the mentorship. That one right there is a rally. It's a smart money concept. So what we get is like we get a rally, we get a base and another rally, and that rally pretty much sells off back down. It comes back down here. Let me just remove that. So that rally sells off, comes back down, and right here inside of the prior zone where we pretty much broke out from, when we come back down inside, we look for a demand candle reversal at the retest of the zone as our buy entry for the move back up. And that is known as a smart money concept, backtest buy signal strategy at the demand zone. So what we are seeing there is exactly that. We got rally, base rally, smart money zone, and then a rally. And then, of course, we get more breakouts, which lead to more rallies. But yeah, and then eventually we can see we get a topping process right there. So this was support. This right here was support, support, support. However, right up here, we were seeing lower highs, lower highs, lower highs, and it looks like um, yeah, eventually we get a trend turnover, and that puts us in a downtrending market for 1981. So you can see those connecting those data points there, team. You don't always have to like identify a downtrend or a weakening market right away. Matter of fact, you're never going to know it. So the beauty of us taking one day at a time in trading is like you can see once you connected those data points and then just continue to extend your line, you would have continued to catch. Let me extend my line here to show you. Even if I don't adjust it, and I just extended it, you can see that you would have caught that downtrend, and that right there. Once you got that rejection, that would have sealed the deal for the market to enter a downtrend. And you can see this is where the breakout happens. Now let's take a look at the breakout candle at that downtrend. Absolutely magnificent. Absolutely magnificent candle. If you see that candle, you cannot tell me you're not going to expect the market to break out from here. Very, very nice candle. So that's what I want you to do for from here forward. I want you guys to chart everything, look at the details. When we get this big breakout, you see how we had a massive rally base rally there? So let me just back up a little bit. So we had that massive rally base rally there. Now, if I go back to the weekly chart, we'll see that a little better. Um, Give me one moment, team. So right there, you see we had where were we? Where were we? Let's go back to the daily chart. Go back to max, and I think it was 1971, right? Um, Actually, oh, okay. So this looks like it was 2021. So you can see in 2021, same thing. We got that downtrend. If you zoom in, like you'll notice the same things that you are seeing here. If we go back to the 1971, very, very similar downtrend breakouts. So we can see this was a rally base rally, and the same smart money concept happens on that much bigger picture. We go all the way down, we sell off all the way back to where that level of resistance was, turning it into support with the right strong demand candles, and then moving all the way back up and going for a new uptrend. So if I go to the weekly chart, I want to show you that 1970s chart. Give me one moment, team. This is what I'm referring to. So you can see we got a rally base rally that had a big, big advance. And then we go back down here. Guess what we do, team? This is going to blow your mind right here. This is going to blow your mind. Just pay attention to how history repeats itself, okay? You see this 1971 from 19 all the way to 1981. So, sorry, 1975 all the way to 1981. We got the breakout in 1979, okay? From 106 on the S&P 500 index all the way to 140. From 141, what happens, team? We get a big, big correction all the way back down to the 200 SMA line area, just where the prior level of the breakout was, right there. We turn that level into support with a what is that candle there? What is those three candles there, team? What does that make? Those three candles right there. What is that pattern called? Anyone aware? Before I show you the other example, these three candles right there, what does that make? It's a reversal pattern. It's a massive demand candle, which is exactly what we want to see at a level of support. But what is that candle called? Sorry, what does that three candle reversal make? What is it called? Yeah, Sam 6. That's right. It's a morning star. Okay, team. Now let's go to a morning star real quick. Let's go to a morning star. I'm going to show you an example of a morning star. So that's what I'm saying. The more data. Oh my God, beautiful sunsets showed up when I typed in morning star. Morning star candlestick pattern. So this is a morning star. Okay, you got a bearish breakdown candle. You got a doji, which signifies indecisiveness at the bottom of a downtrend, and then you get a massive demand candle, and that is known as a morning star right there. Okay, so that's a morning star reversal. So now, team, remember this is happening from when? From 1975. In 1975. Okay, this happened in 1975. All right, team. Are you ready to see something now? Now I'm going to show you something. So you see how this back test happened? We had, let me put that into use. Let me just zoom in, okay, team? Give me one moment. Let me zoom in because this is so great. This is so, so great, you guys. So you see, we have this. We have this right here. We have a rally, we have a base, and then we got a massive rally. We all have that right. Correct, team? We're all on the same page here. And then we got this correction here, this correction that takes us back down to the level of the 200 SMA line. And we got that very, very strong demand candle right there. So that would be a beautiful opportunity to enter on the S&P 500 heading into 1981, right? Right, team? That would have been an amazing opportunity, right? Now, this example right there, this example that we are looking at is this one right here. The reason why I'm showing you this is because you see, this is what we are looking at, team. We are looking at this rally-based rally. We have a rally-based rally that goes down, retests that there. And then once you get that demand zone, inside of that buy entry, we buy long-term. That's a smart money zone. Now, let me show you this, okay? Now I'm going to remove this from 1970s and we're going to go to today's time. We're going to go to 2021, okay? We're going to go to 2021. Are you ready, team? Let's go to 2021 here. And let's take a look at the same thing here. The same things can be expected. We got a rally here. Let me just bring that back here. We got a rally. Rally. And then we got a base for we got a rally here, and then we got a base formation, and then we have another rally. And then what happens is we get a sell-off. The same thing happens. We get a sell-off, and pay attention to that candle from the sell-off team. So if I were to draw the levels a little bit better so you guys can see it, you see, this was the zone there. This was the breakout. Look at how that turned into support in the same fashion, you guys. In the same fashion. In the same fashion, this level turned into support and we printed the same bullish engulfing candle. The same pattern here happened where we did a base rally. We came back down to that retest and then had that massive uptrend. Now, why is that so important? I know you guys are like, but that's not a big move like it was earlier. The thing is, team, during this time, I remember it very clearly, and I even alerted for our Discord team in the weekly watch list and the market analysis. Proof is right there. Matter of fact, we talked about this in the supply and demand from chapter 1 as well. If you look at this particular setup here, the reason why this was so absolutely important is because this was during you guys remember how bearish the market was during 2021 and almost 2022? You guys remember the market wasn't very healthy. People were talking about the Great Depression, us going into a recession, and all of that. So having to see that, like right here, I remember. I mean, people had the right reasons to be bearish too, because this was a potential lower high to that one. So if this was a lower high, it could have sent the S&P 500 towards a new lower low in 2023, all the way in the 3,000 lows. All the way in the 3,000 lows. But you know what happened? This bullish engulfing happened, and that made us so confident. What else did we also see? The TTM squeeze resetting as well. So the same thing repeat here that happened from 1975. That was very, very powerful. And I like it literally happens in the same way. So it's really beautiful, you guys. It's beautiful. Once you learn price action, you're going to notice it everywhere. Matter of fact, we have been studying bullish engulfing candles, right, team? We have been studying bullish engulfing candles. Take a look at that beautiful bullish engulfing there. Take a look at that beautiful bullish engulfing. Take a look at that beautiful bullish engulfing. This is all on the weekly chart. And believe it or not, I remember every single one of these. I swear to you, I remember every single one of these. And I used to share it with my team. I used to have a team and I used to share it with my team. At the time, candlesticks was all I really, sorry about that, I really knew in regards to price action. I didn't know about supply and demand dynamics, all of that good stuff. So market structure and all the good stuff. So seeing those bullish engulfings, I traded that every single time as a uptrend continuation to the ongoing uptrend that was in place there. So really very, very powerful, very beautiful. Continue learning, team. You're going to become an amazing trader. I promise you that. That's all for today's session. I guess we spent the entire session on convincing our team to start drawing charts on their own and really studying this price action. And I'm perfectly fine with that, as long as you all are, because I'm telling you, if you do study, it's going to make your job so much easier. Like, knowledge is powerful, and I'm telling you, like, if you just learn the price action tools, the market is going to be here forever. The market is not going to go anywhere, and the faster you learn, the better you're going to be. So if you learn these price action tools, you're going to be set. You're really, really going to be set. Not only are you going to see use in it. Oh, check this one out, team. Look at that rally base rally right there. Look at that rally base rally in the bear market, when everyone was bearish right there. Look at that beautiful rally base rally. So if we go back to the chart, I'm going to go ahead and draw where Rain Bond drew that. I'll go draw that zone there, that smart money zone. I'm going to draw that smart money zone. And now what I want to do is I want to go to a different time frame. I want to go back and look at the other time frames to see how that played out. So let's go ahead and remove the annotations. And now I want to go to the daily chart and see how price action was behaving during this time. Look at that, team. Look at that. Just look at this beauty here. Rally, base rally, just breaking the COVID highs, right? Just breaking the COVID highs. This is when we broke the COVID highs. So I remember at this time I was working at a call center when the COVID happened, and at the time it started off as a conspiracy theory, and then there was like rumors that there was a lot of smoke in Wuhan, and that, stuff like that, and then all of a sudden COVID hit. It became, it became a pandemic, and the stock market took a major crash. You can see we came right back up to where the stock market took a crash from, and we just went sideways. This is after the Fed Reserve came in and rescued the markets. We went sideways for some time, consolidating there, and then we had a major uptrend on those stimulus and all of that, basically going on an entire more than a year bull market run. And then what happens is, we give back that entire bull market run when the Fed starts increasing rates. So the market, the monetary policy goes into quantitative tightening, and now money is basically, instead of money flowing out, money is flowing back in. Like, everybody's stingy. The market makers are stingy. There's little volume. There's just not that bullishness of money there anymore. So we go into that bear market, as we can see there, and right around here, this is exactly where the zone was, the smart money was. We come down here, print the right beautiful candle, and just set the stage for that breakout, and we haven't looked back ever since. We moved on. So let's zoom in. What kind of candle was that? Take a look at it yourself, team. A beautiful demand candle right there. Beautiful demand candle. And yes, sir, that is a falling wedge. That is a falling wedge as well, Sam. More like a bullish channel too. More like a bullish channel as well. But yeah, team, do you see how powerful this is? Like, I'm telling you, I really encourage you guys. I encourage you guys to start charting everything. You see these lines here? I want you to draw the downtrends. I want you to draw the downtrends, recognize where the breakouts happen, which line is the best, recognize all of the consolidations, all of the times bulls. For example, you see this resistance line right there, team? What did it take for bulls to try and break out higher? Okay, they had to consolidate, they had to do this, they had to reset the TTM squeeze, and finally, once they turned that level of resistance into support, they went for more. So that's what I really hope to achieve with you guys, um, pretty much practicing in the upcoming weeks. What is the meaning of arrows, of the colored arrows? So I have the momentum trades, and I've honestly had it since, it's a default one, and I've had it since 2020, actually 2019, and it's something that helps me, and I love it. Like, honest to God, one of the reasons why I love this particular indicator, this momentum arrow, is it happens at the perfect time when I need it the most. What do I mean by that? You see how we are in this big consolidation here? We're in that big consolidation, and now I don't know what's going to happen. First, we get this big red bar, and that tells me that, bears are very, very strong. There's a big bearish momentum down there. We go down, okay, bears failed to break down. We come right back up with that demand candle, and that demand candle right there changes everything. However, there is still more of these bearish attacks. You can see we came back, so right here, we got the yellow momentum that cancels that one out. Then we get another one, which this one really kind of cancels it out. Then we get another one, and now that one cancels it out. So then we get another backtest of that level, and now bulls is stepping in with that yellow momentum candle, and that, after that, they're gonna advance because they have been holding for so well, and due to that lack of supply and all of the gap ups from the bulls, it clearly shows that bulls have the strength and they're going to advance from there. So, it just happens for me. It formulates at a perfect time when I need it the most. And this is why I really like that indicator. You can see it right there. I just love it, honestly. It just signifies, simply put, it signifies when momentum is present. It signifies, the yellow one shows that, bullish momentum is overwhelming. That's simply what it means. It just means that momentum is picking up within that given trade. I honestly don't know what the inputs are for it, but I'm telling you, I have used it, and it is so powerful. It is so freaking powerful, and I have kept it on my chart forever, ever since then. This is how I have it. If you guys want to set up the input, I'm not really sure, how to set it up. But yeah, I haven't really changed much from it. This is the same. This is the same inputs. Oh man, yes, it 100% is. I really, I mean that. It 100% is. It is so absolutely powerful, and I really love it. It happens just like, what I mean by it happens at the perfect times is, look at right here. Like, this is when I needed to see if bulls are present. This is when I needed to see that, and bulls step in right there again, right here. This is when I needed to know if bulls were actually there, and it just shows up. So, right here again. So this is what I mean. Like, I haven't even looked at these candles, and I'm just showing it based off of my experience. Even till this day, they just happen at the perfect time. Like, look at this one right here. Look at that one right there. Look at that one right there. Look at that one right there. It just happens at a perfect time, and I really love it. I love it. I mean, look at that, team. Just look at that. There was not a single fake yellow signal that happened anywhere within that time. Every one of them that happened was very, very strong. Let's take a look at Google on the daily. Yeah, Google has it on the daily, and I'm very curious to see how this is going to play out. The only thing is the TTM squeeze is a bit off, but I do love the way they set this candle up, and I'm excited to see how this is going to turn out tomorrow. But yeah, seeing this candle, this yellow momentum, countering that out, I'm looking forward to a green day on Goog tomorrow. Team, that concludes my session. I'm sorry that we didn't cover anything on the bullish engulfing side, but I wanted to give the team some understanding or some sort of action on what to do. Just start drawing on everything, team. Draw on everything and message me. Tell me how you have improved. Send me some of those charts so I can look at them. And I'm really excited for you all. I will be dreaming bullish engulfing candles on all of my. Awesome, Charles. Awesome. And then once we're done with bullish engulfing, we're going to cover this particular candle as well. This is called a bullish hammer. And the bullish hammer, although it is not very common, it is very, very powerful for us to recognize. So this is a bullish hammer right there. This is a bullish hammer. This is a bullish hammer. So that's another very, very powerful candlestick strategy, candlestick pattern that we will study in the upcoming sessions. This is a bullish hammer at the bottom. So really, really good understanding. That's all for me today. I hope you all have a wonderful rest of the night, team. I'm very excited for tomorrow's FOMC. We're going to get a Fed rate decision, and if we get a rate cut, I'm expecting the market to rally towards 605 on the S&P 500. However, if we don't get a rate cut, there's a great chance that we can sell off at this level of resistance and head all the way back down to this level of support. Now, team, what happens if we go back down to this level of support? Is that bad? Is that bad if we end up somehow, some way go back down to that level of support over time? That just would be an opportunity for us. So, yeah, really, this is a great way to look at price action. I'm telling you, I cannot wait for you guys to learn this and be able to do this on your own. Make me obsolete. Do this on your own over years and years and years. And what I really can't wait for is like how this is going to help us within the next 5, 10 to 15 years from now. Like this price action understanding is very powerful, you guys. We're charting the S&P 500. And if we notice that the S&P 500 is showing strength at a certain level, and we know that this can last for months and months and months, we can look at which particular sectors are getting the rotation and go with the rotation of that market. Speaking of rotation, look at the way some of these tech sectors are setting up. Wow, very interesting. Very interesting. Honestly, team, you know what I say? Um, I know this will probably sound somewhat strange because tech has been running up. A lot of these tech stocks have been doing so well, but something that I can't stop but notice is like if you look at XLK, that sector is very, very do you guys remember what we talked about in regards to digestions? This one has digested for some time and it is sitting at a level of resistance where it can get that expansion that we talked about. So, what do I mean by that expansion? Let me go ahead and um, let me update my chart. This should be right here. We should be um, updating it to that. So, if we take a look, 237 is resistance. Um, once we break 237, once we break that level of resistance, this can send the XLK, which is the technology sector, for a nice expansion, pretty much the same way we had it there, right there. Duplicate that and get another expansion. So it just seems to be off of just seems to be setting up, honestly. It really seems to be setting up. I'm curious to see how this week is going to turn out, but if they do go down, I just want to say this, okay? If they do go down here, let's say somewhere around there, and they end up holding, that's even better because this will tell us that they will have picked up even more momentum to try and advance higher. Matter of fact, team, I just want to say this, okay? Having this price action understanding, I mean, literally right now, I can tell you that I am so absolutely excited. And let me tell you why. because I'm looking at this on QQQ, on the technology sector, and I'm seeing this consolidation, and I'm like, even if they go down here, and they end up, let's say, coming down to like 210 area and provide amazing opportunities on these tech stocks, we're still going to bank on them in the future. Just look at this beautiful rally based rally. It's just setting up for a potential melt up operation in the future. So I'm really excited for this. Seeing a chart like this just makes me happy because it shows that bulls are consolidating and getting ready for that larger move that's going to take place. You all remember we did that with Microsoft, and oh my goodness, team, look at Microsoft. Like, as we get closer, as we get tighter and tighter in this range, what are you noticing with Microsoft? The candles are getting absolutely scary. I mean, look at these, look at the sheer size of those green candles now. I mean, my goodness, I can't wait to see how this is going to turn out with earnings. By the way, Microsoft reports earnings tomorrow, tomorrow after the closing bell, team. Keep that in mind. This is why we have been getting you out of so many positions, because we're going into the big tech earnings, and we're going into FOMC. It's going to be absolutely wild. And whatever happens, I'm ready to buy the dip. I'm super ready to buy the dip because I expect the market to continue to advance higher. That is a cup and handle, Mary upon. Yes, sir. Definitely is a cup and handle. And it's about to get fun. It's about to get fun in the upcoming months. Looks great, you guys. Honestly, Microsoft looks beautiful, beautiful consolidation. And if earnings goes well, if earnings goes well tomorrow after the closing bell, oh man, I am excited.